Emirates NBD reveals its preferred 2023 equity markets and world markets extend gains. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Emirates NBD has revealed its preferred equity markets for this year as it starts 2023 with a reshuffled long-term strategic asset allocation. Dubai's biggest lender by assets says its preferred emerging markets are the UAE and India, and its preferred developed markets are the US and Japan. They say new listings in both regions will aid performance. Emirates NBD recommends income strategies as the best hedge against lower growth and potential recession. The Central Bank of Egypt's sales of 182-day Treasury bills has reached $1.75 billion, up from $89.2 million last week. Investor appetite soared following the recent devaluation of the Egyptian pound against the dollar. Sales of 364-day Treasury bills also climbed to $1.03 billion from last week's $12.7 million. The bills have an average yield of around 21%. Egypt's pound has lost 51% since March 2022. The UAE is boosting its financial assistance to $3 billion to Pakistan. The move is key to boosting its foreign exchange reserves as it reels under an economic crisis. The UAE will provide $1 billion in a fresh loan and roll over an existing loan of $2 billion. The UAE's support comes 2 days after Saudi Arabia said it's considering boosting its deposit in Pakistan's central bank to $5 billion. Oil prices slipped in early trade this morning, but they're on track for gains of more than 6% for this week on solid signs of demand growth in China and expectations of less aggressive interest rate rises in the U.S. Brent crude traded this morning at $83 and West Texas traded at $78. All three main Wall Street indices extended gains overnight after the much-anticipated consumer price index came in at its lowest level since October 2021 as the Fed's interest rates begin to kick in. The report also showed the first month-on-month CPI dip in about 2 years. The news boosted bets on the central bank lifting rates just 25 basis points next month. In early trade today, most Asian markets tracked the U.S. rally with Shanghai, Sydney, Seoul, Singapore, and others all in the green. China's exports in December fell at their fastest pace since 2020, owing to a drop in global demand and after health restrictions hit the economy hard. China is still reeling from years of its zero-COVID policy, which hammered businesses, supply chains, and consumption. Exports fell 9.9% year-on-year to $30.6 billion. It's their second consecutive month of decline and the biggest fall since early 2020. Imports were also down again in December, sinking 7.5%, following a 10.6% drop the month previous. Tesla cut the prices on its top-selling EVs for the U.S. market today. The price cuts on the Model 3 and Model Y ranged between 6% and 20% less than the prices they held before the discount. Tesla also cut prices in China and other Asian markets last week. Along with a previous price cut announced in October and recent incentives, the China price for a Model 3 or Model Y was down between 13% and 24% from September. And Apple is lowering CEO Tim Cook's annual compensation by more than 40% this year after the billionaire recommended the dock in pay as it didn't make sense for investors. Cook earned $99.4 million last year due to the price of Apple's stock, which accounts for the lion's share of his income. Cook will again be paid a $6 million bonus this year on top of his $3 million base salary, which has remained the same since 2016. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.